National Insurance Clearinghouse, the marketing arm of Brokers Alliance, presents a Bravo video event, the Business Insurance Zone, dedicated to financial professionals who use insurance in their practice. And on today's show, Indexed Annuities with Indexed Annuity product expert Sheryl Moore. And now the host of the Business Insurance Zone, the whiz of the biz, insurance columnist Steve Savant. Well, welcome everyone to the Business Insurance Zone. I'm Steve Savant, your host. We're broadcasting live to a nationwide audience right here in Fountain Hills, Arizona, home of America's largest fountain. And with me today, Indexed Expert Extraordinaire, I have to say. I'm genuflecting if I wasn't in this chair, Sheryl Moore. Sheryl, welcome to our show.
Thanks so much, Steve.
You know, we had her on, I got to say, and I just say this at all confession, she broke every record we ever had on total clicks, total embeddeds, total downloads. I mean, Sheryl, you ruled on the indexed UL scene, and I mean, people loved your show. Today, we're doing indexed annuities all this week. We're going to break it all down. We're going to unpack it, unbundle it. You're going to look at the mortality. I feel like we should be in mechanic outfits today because for the whole week, we're going to be breaking it down like mortality mechanics.
Gotcha.
Right? So we're going to be breaking it down. But before we get into it, I want to talk a little bit about, not that I'm a history buff of insurance, and I got to say, that's not really an appeal. But I have to say, I was looking on your site, and if you haven't been on Sheryl's site, annuityspecs.com. You need to go out there, check it out. We are a major subscriber. We also do Sheryl's life side. I know there's rumors you're expanding things, and we'll see what happens on that. Yeah. I'm looking forward to that. I want to talk a little bit about some of the history here because I really enjoyed reading some of the ideas about, okay, way back in the day, I did not realize, like at the turn of the last millennium, that there was something that you said here that was like, it was invented like 1,000 years ago, the first annuity or whatever you said here.
17 years ago.
How many years?
17 years ago.
Okay, so not 1,000 years. Okay, 17 years ago.
In insurance years.
In insurance years, yes. Well, talk a little bit about who brought that up. I mean, who actually invented this?
Actually, it's a company that today is known as Sun Life. At that time, they were known as Keyport Life. Do you remember Keyport?
I do.
Okay, yeah.
I do. I've been around forever, so yeah, I remember Keyport Life.
It was really outside consulting firm that helped to develop the product, and they were really kind of experts in variable annuity product development. Mm-hmm. But they thought up the idea of, well, what if we kind of added the two best things about VAs and fixed annuities and put them into one product? So their idea was just to create a floor so there was no loss, but to have indexed earnings based off the performance of the S&P 500.
Now, were they buying the options of the S&P at the time that they invented this in 95?
Yeah, I mean, the pricing of the product at that time is the same as the pricing of the product today. Mm-hmm. That actual product design is far different from anything we have today, though. They actually used a monthly averaging chassis over a 10-year period on their most popular product. And in fact, that product is infamously one of the top-selling index annuities in the history of these products, the Multi-Point 10.
Wow.
So
now, from that date to this date, I mean, things have so changed.
Oh, no kidding.
I mean, it is so changed. I mean, how many new, let's just do index annuities because this is the whole week. How many index annuities have been introduced since this date?
Well, the interesting thing is, at the beginning, we only had, maybe a dozen carriers offering these products, and each company maybe offered 2 or 3 at the most. Many of them only offered a single product because it was a new thing. Am I going to commit to this? How's my distribution going to react? But today we have 42 companies offering indexed annuities, and we have about 246 products available today.
246. 46 products. Well, I remember, and back in 95, I remember when they came out with this and a couple other of the annuity companies. This will never go anywhere.
Oh, I know.
There was so much negativity on indexed annuities. I mean, they said this isn't going to go anywhere.
I think a lot of that negativity was for a good reason, because when you look back at the history of insurance, every time we've come up with a new product, product development tends to get ahead of regulation and compliance and market conduct. Oh. So initially, I had guys calling index annuities VAs with training wheels. And it really led a lot of consumers to think, I get all of the upside and none of the risk. And that's not exactly how the products work.
And you're mixing regulatory governing bodies because the VA, the FINRA, back in the day, SEC, I'm looking at NASD and the SEC overlooking and overseeing VA. And then we were still in the insurance land in the index because nobody even looked at this as a regulatory security?
Well, that's interesting thought that you bring up, Steve, because initially we called indexed annuities equity indexed annuities or EIAs. I'm really against using the word equity in the line of index life or index annuities now, just because it kind of gives the impression that it is an equity product. It's not. It's not a security. It is a fixed insurance product. But when you combine the unknown compliance issues and some of the advertising that we had initially, it kind of led a lot of people to think these were securities products. And in fact, SEC back in '97 kind of released an inquiry saying, hey, are these securities? Tell us more about your products. They requested marketing materials and contracts to kind of get to know more about the products. But in the end, SEC really never did anything about that inquiry. So
I'm looking at this growth of this industry. I mean, and I haven't seen the 2011. Do you have the 2011 numbers?
Actually, we're waiting for 2 carriers' earnings calls. So on the 13th of this month, we'll be releasing 2011 sales.
I'll ask you for a big guess. Your 2010 numbers were $32 billion with a B.
Well,
We're going to hit that number easily.
I think we're going to have another record year in 2011. I already have preliminary sales with the exception of a couple of carriers, and we're at 31.5 billion or something. So we're going to hit it.
Be on this number. Now, when I think about this, and I'm looking at the regulatory issues, you're specifically speaking to Rule 151A, because now all of a sudden it's somebody said it should be a security. I don't know how that happened, but let's talk a little bit about 151A. It was defeated last summer, right? We know that.
Yeah.
Okay. However, it's still hanging around.
Yeah.
There's people trying to reintroduce this, come through another backdoor way.
There's a couple of issues here right now. Number one, I get a lot of advisors and agents contacting me and saying, 151A is over. Why are broker-dealers still taking a haircut off the commissions of indexed annuities? Well, they still have to comply with the NASD, or now FINRA's Notice to Members 0550. So that's one issue. But the other issue is, we defeated SEC's 151A through the Dodd-Frank Finance Reform Bill. The Harkin Amendment helped to secure the fixed insurance status of the products. But we do have some securities divisions. And keep in mind, we are a state-regulated industry. We have a lot of states that have their securities division in the same office as their insurance division. And I don't know how many people are aware of this, but guess what? Some of our insurance regulators are not super big fans of indexed annuities or not big fans of annuities in general. So we now have some states saying, well, we think these should have been securities. They're not. And about 45% of those who sell index annuities are not registered reps. So they don't have a Series 6, Series 7, et cetera. And now some of those securities divisions are saying, hey, if you're a licensed insurance agent, but you're not a registered rep, and you're going to replace a securities product, let's say a VA or mutual funds or whatever, with a fixed or indexed annuity, if you're not securities licensed, you're giving unregistered investment advice. And so I'll tell you, in all my speaking engagements I've been doing for about the past year, and usually 4 to 5 a month, I am not speaking with less than 2 advisors at each event that say, I didn't even look at the security, I didn't look at the statement, and now I'm having my hand slapped, I've been penalized, fined, I might lose my license, because they're saying I gave unregistered investment advice. And Steve, some of these people, it's merely an instance of, a little old lady coming up and saying, hey, that thing you sold to my neighbor, can you sell that same thing to me, because I'm tired of losing money. And, it's really a quandary, because when you think about it, what does that mean for the future of safe money products? If I were to say, I'm an expert, I know this product that I have is not good for me, please help me to replace it with an indexed annuity. And you help me to replace my variable annuity with the index, but you're not a registered rep, you could potentially lose your license. You could lose your business.
Yeah, I'd like to know, and I don't know if we're going to go down this road. We could. Hey, we want to be controversial. It sells clicks. But I have to say, I don't want to get off the rails, but honestly, when you think about it, if I have people soliciting, a client is soliciting me.
Right.
Because there's stuff all over the net on index annuities. I mean, it's everywhere.
Oh, yeah.
So you got plenty of, listen, they used to call us baby boomers. Now they're calling us Googleites, because we're all over the internet checking. Some guy comes and sells me something, I'm checking it all out. There's so much PR going on, and I can check in Google and I can find out overnight, is this guy truth? Is that the best product? I mean, the blogosphere on finance is just clogged.
Well, it's funny you mentioned that, Steve, because the reason I started my business about 8 years ago was just because I'd lost money in a 401k. I didn't know you could lose money in a 401k. And when I found out that there was such a thing as an indexed annuity and it actually matched my risk tolerance better, I was pretty angry. I looked for information on the web, which was new to me at that time, but in my library, in the newspapers, I couldn't find any information on it. And today at annuitiespecs.com, I'd say, we typically get 2 to 3 emails a day from consumers who are saying, I read an article of yours, or, I appreciate your website, it's helping me, and I have this guy who's proposed this. Is this the best thing for me? So they really are taking control of their retirement more than ever before, and they're asking the tough questions, whereas, 10 years ago, if I wanted something for my retirement and I met with you, I would just trust that you were making the best suggestion. And now with the information technology age, they're really taking control and asking questions themselves.
Yeah, it's kind of a tale of two cities here. On one hand, if I don't have FINRA licensing, can I ever give full counsel? Can I really give it?
That's
and so
the
there's
question.
one issue. Okay. The other issue is, hey, look, I know that America has changed after this last 2008 debacle.
yeah.
I mean, let's just face it. Baby boomers, us Googleites, principal preservation is totally ruling the ship right
Exactly.
now. I want upside potential. I don't want to worry about loss. I don't have the time to worry about loss anymore. I don't have 2, 3, 4 cycles in the market for me to make up before I hit retirement. So this is a huge controversial issue, and we're going to be all over it, Sheryl. I can tell you right now. We're going to watch this. I'll blog on it, write articles, because I want to see this thing to its end. And I want to encourage you, listen, you know what? Maybe you're going to have to get your Series 6. I mean, I hate to say it, breakdown. And one other thing, the broker-dealer that we partner with, that a lot of our own agents play with, no issues on haircuts on any non-FINRA product, and we have permission to blog and write articles and tweet on non-FINRA within the scope of our BD, so we have a lot more freedom in our communication. Again, I need to underline, non-FINRA.
Well,
Non-FINRA.
I'll say at this point, I don't endorse any company or product, including Brokers Alliance, but
I'm wondering.
well, you're getting a little
understand.
endorsement here.
Sorry.
But I will say that's an exception to the rule based on
is.
what I'm hearing from my distribution.
Right. When we think about it, 151A, I don't know if it's dead. It's dead now, but, resuscitation is one of the big legislation issues. Anytime we come with Congress, their bottom dollar. And, I wonder who's driving this. Is this really congressional, or are the BDs just wanting their piece of the pie?
I've got my own opinions. But
Okay, well, are you going to tell us in the second segment, or do you want to keep yourself quiet today?
let's leave a cliffhanger.
Well,
Go into the second segment.
I love this. Sheryl Moore. We're going to be disclosing. She can't help herself but to tell you what's going on. And, of course, I love stuff like this because that's what our show's about. We want to be able to tell as much as we know. Sometimes it's opinion, but we're okay with that. You're listening to the Business Insurance Zone, the talk show that focuses on insurance in your practice. You can write me at my email address, thebiz@brokersalliance.com, or just call us 1-800-290-7226, extension 147. Cheryl and I will be right back after a word from one of our premier product providers. We'll be right back after the break.
Life doesn't always fit into 5-year increments. That's the standard for most term insurance policies. AG Selected Term offers you a powerful new way to help your clients customize their life insurance plans to anticipate known future events such as retirement, paying off their mortgages, or funding their children's college education. Buy only the term you need and no more. That's AG Selected Term from American General Life Company and the United States Life Company in the City of New York. Policies not available in all states.
Well, welcome back to the Business Insurance Zone. I'm your host, Steve Savant. I am an insurance columnist, a financial color commentator, and in my own mind, interviewer extraordinaire. Before moving forward with any of the strategy we talk about on this show, always check in with your CPA, your attorney, tax attorney, or if you're FINRA licensed, your broker-dealer compliance department. If you want any questions or quotes on life insurance annuities, DI, LTC, group pension plans, just call 1-800-290-7226, extension 147. Hey, it's not what I know, it's who I know, and that's why I have Sheryl Moore on, goddess of all that is indexed annuities, Mensa of marketing. Oh, yes. And there's more all this week. Remember, I'm just on the Monday show. By the time we get to Friday's show with Sheryl, I will have deteriorated. You know, Sheryl, we talked a little about the first, a little bit of history, a little bit of regulatory issues. We don't know where it's all going to go, but we'll be on top of it to say what you need to do and what you not need to do, and what we're looking for. We're really trying to, we kind of talked about this in the first segment. You're going to kind of release a little secret there. I don't know if you still want to do that. Do you want to do that?
Sure.
Okay. Well, I want to talk about your little secret just because, or your little opinion. And by the way, everybody has an opinion piece. My newest weekend show is going to be coming out in late April. I hate to plug it, shameless plug for Steve here, but Sheryl gets so many clicks. I don't know, I'll get better press. I have a new one coming out, Mind Your Own Business. It's my 5-minute pontification on Saturdays and Sundays. I'll be releasing it on all our distribution channels, and you'll be able to see that. It's my 2 cents in on everything. And my first one that I volleyed on was the whole issue of a young man getting sued because the client said he didn't know his life insurance. And I said, oh, what did you think you were buying when you peed in a bottle and drew blood?
I know.
A mutual fund? Well, we'll get into that later.
Okay.
Okay, we'll talk a little bit about what you're going to kind of reveal something here.
Well, basically, I think this is less of a legislation issue than it is a regulatory issue. I've been at the forefront of the possible security status of index annuities since FINRA first proposed the Notice to Members 0550 back in August of 05. And really based on all of my work with the regulators, and I do work closely with them, as well as the legislators, I'll tell you this much. The legislators largely don't understand. Initially, when we tried to get their assistance in, making sure that index annuities continue to be regulated as fixed products, they thought that insurance and securities were the same thing.
Wow.
And these are the people who are creating laws for us
and
today.
running the show.
Yeah. So we had to do a lot of education initially, but based on those interactions, I got to tell you, sure, there's a few people there in Congress who definitely understand and have their agendas and have big lobbyists behind them. But this is largely a regulatory issue. And I will tell you that we have heard a lot of complaining from registered reps in the past. And if I had $1 for every guy who said, why would I sell an index annuity when I can sell a VA with a living benefit? I'd be a rich, rich woman. But a lot of those folks in the past have complained and said, I'm losing business to, so-and-so and such because they're replacing my business with index annuities. Or I had a client and they were going to buy a VA with me, but they bought an indexed annuity with this other guy. And so essentially, my opinion, not the opinion of Brokers Alliance, is this really came down to some folks acting like spoiled kids and complaining to FINRA, and FINRA starting an inquiry, and it all went downhill from there. It's about lost money, in my opinion. I mean, you look at where VA assets are. Anytime there's a decline in the stock markets, people tend to move money out of variable annuities. Traditionally, those monies have gone over to the fixed side of the house. So a lot of the companies that don't sell indexed and sell only VA and fixed, they don't really freak out when there's a big decline or a lot of volatility in the markets because their money's just shift from one hand to the other. But FINRA is a self-regulatory organization, and they're funded largely by the fines and penalties that they come down on the member firms with. So you look at, okay, if VA assets are declining, even if there are the same number of penalties and fines that they had the previous year, it's on less money. So you've got to find another revenue source, and where do you find it? Maybe the fastest growing segment of the life insurance market.
I'm wondering, we should have a debate, which I will arbitrate, and between VA living benefits, contract, the chassis, and indexed living benefits, because there's indexed living benefits out there.
Yeah,
and by the way, the last one I saw, and I don't want to get into the study because they haven't paid us yet for the commercial, but I'm looking at one where it's 8%. I'm thinking 8% compounded. Are you crazy? I mean, why would I do that? And why would I be sweating bullets on the market? And just think about this. The older you are, if you're my age, if you're a baby boomer, if you've been Googling all over the place, you're a Googleite now, we're already down the principal preservation issue. So we're sold on that. Just give me a little upside potential and I could sleep at night.
Well, let me drive that home, Steve, because while I'm sitting here talking about, record sales of index annuities last year, potentially breaking that record this year, index annuities are always driven by the contractual guarantees and the safety of principal. A lot of people think it's based on rate. It isn't. People, with fixed annuities, it's very commoditized. Whoever has the highest fixed annuity credited rate wins the business. Indexed annuities, That's not the deal. I mean, it's people who are saying, stop the bleeding. I can't lose any more money. And to really drive that home, let me tell you, my average annual point-to-point cap right now, less than 3.5% on index
Well,
annuities.
that brings me to a whole new question. I mean, Sheryl, we just unloaded our biggest annuity update of our entire time we've been broadcasting, and we're sitting at 3.45, locked for 5 by an annuity carrier right now. That is a guaranteed rate. I'm sitting there, maybe I might get, what did you say?
3.32%.
I got 3.45 out the door right now.
Exactly.
See, so I'm right here now. It's like, if you keep dropping the index cap rates, right? And now they're below the leading carrier on a 5-year platform. I mean, what am I going to do here? I mean,
well, you know, one of the big things that's really driving sales of index annuities right now is those living benefits. The generic name is a guaranteed lifetime withdrawal benefit, or GLWB, but a lot of carriers have their own names. Income benefit, income rider. Those are really driving sales of index annuity products right now. And for the guys who are, you know, VA folks, and really everybody should have several different products in their arsenal. There's no one product that's a solution for everybody, but the living benefits on index annuities are very dissimilar to the VA living benefits, because on the VA side, those living benefits were created to provide some sort of guarantee.
For income.
Right.
For income.
For income. Some sort of guarantee for income, so that you know you'll never get less than X dollars a month for the rest of your life. Whereas the base product, you can lose money.
Oh, yeah.
And definitely you can not only lose your gains, but your principal too. Well, on an index annuity, we already have principal protection. Gains are locked in, and, you know, interest is locked in. So it's not that people are adding these income riders to the product to provide some sort of guaranteed income. We already have that. This is an alternative to annuitization, Steve. And, you know, try and guess how many people annuitize their annuity.
Nobody.
2%.
I know, it's just ridiculous.
Well, and the thing that's really ridiculous to me is that's the whole value proposition of an
there you go.
annuity. You know?
Yeah. I love it when we take the ideology of the sale and we never do it in pragmatic everyday life.
Well, we talk about guaranteed lifetime income,
Right.
income you can't outlive, and that is a huge value proposition. When you consider, Steve, number one, I just read an article in MarketWatch that talks about the number of people who have been living past the age of 100 over the past 10 years has increased 2,200%.
Oh my gosh.
Okay, now, I read a Time magazine article last summer that said that the first person who's going to live to be 150 years old already walking the earth today.
No way.
Yeah, not only that,
Think about it. The Guinness Book of World Records, that gal died 5 years ago at 121, and you're telling me a person that's going to live 150 years has already been born.
not only that, Steve, Time magazine says the first person who's going to live forever will be born within the next 20 years.
Well, I'm sorry, but my theology doesn't work with that.
Mine doesn't either.
Okay, later
I say,
on that, okay.
Yeah, exactly.
Yeah, wow. I was like, okay, whatever.
But doesn't that create a huge story for why annuities are so important?
Well, I'm just thinking here, listen to this. The baby boomer females of my generation, these gals are in shape. They've been doing diet. They've been working out. These are the most healthiest women ever probably walked the planet.
Yeah.
My wife easily will probably see, just based on her genetics and her good, healthy lifestyle, which is untrue for her spouse. Good, healthy lifestyle. This gal's going to see late 90s, early 100s.
Absolutely.
No problem. And I'm thinking, am I annuitizing this under joint? Right? All day long.
Yeah,
I
no
mean,
kidding.
because even if I go down, according to the 2001 CSO or the new Society of Actuaries 2008 VVT, which if you have insomnia, that is the manuscript to read, because that was mind-numbing, I have to say. But I'm looking at that number. You put joint distribution for life on those annuities at 8% or whatever, there is no way you're going to worry about that. I mean, as long as you live normal mortality, the female equation of that is going to take it to the bank all day long.
Oh, no kidding. And you know, the real interesting thing is that when you're talking about that guaranteed lifetime income and living longer, a lot of people say, well, yeah, that's great. And annuity is the solution to that. But you compound the issue by the fact that so many people lost tons of retirement dollars from their nest egg back in 2008.
Yeah, that would be me.
I've got folks here who are saying, look, that guarantee is more important to me than ever. You know?
Than ever, right? Right. When you think about it, I'm really looking at. I'm not looking for everything to go into this. Just like you said, we don't put our eggs in all our eggs in one basket. we should have one part where we're going to annuitize this. Going to be guaranteed. At least we know that's going down. Maybe the boomers will get Social Security. We're still, crossing fingers on that one. But Sheryl, your generation is not going to see the light of day on that. I mean, they're going to push this number to 70, 75. They're going to drop those benefits. I mean, that's what's going to happen. They've already drawn a line in the sand. Whew, I made the first cut, so looks like I might get it. But I mean, really, when you look at it, index annuities should be a part of your portfolio. But my only trade-off is currently, the word I use currently, is that current rates are still edged a little bit above the caps. Yeah. So I could go to bed tonight at 3.45 for 5, locked down and sleep. Now again, I'm not doing a fix to show tonight. I'm just saying that's the kind of thing we're talking about. We're going to be here with Sheryl all this week. We're going to break down participation rates, caps, you name it, we're going to get into it all this week with the #1 authority on index. You can watch this show and all our shows in beautiful HD 1080p right on our homepage. Just hit the red button on our archive. You can watch them all day long at www.brokersalliance.com and on all our social networks, YouTube, Vimeo, Facebook, LinkedIn, and Twitter. I'm Steve Savant. You've been listening to the Business Insurance Zone. That's the buzz on the biz for today. Get in the zone, the Business Insurance Zone.
This has been a Bravo video event of the National Insurance Clearinghouse, the marketing arm of Brokers Alliance, one of the largest distributors of insurance products and services to a nationwide network of insurance professionals. Need insurance guidance? Call Brokers Alliance. Business Insurance Zone, dedicated to